Your mental health should always be your number one priority. A lot of persons struggle financially and have absolutely no clue why. In this video, we discuss the impact of vulnerabilities and how they impact your finances. I am so glad you're here with us today for a conversation that truly matters. We're talking about money, well-being, and security. Financial vulnerabilities impact us all. It's about turning vulnerability into resilience. Let's begin this journey together. Let's talk about Sarah. For 35 years, Sarah and her husband Tom were a team. They built a life together, a home, a family. Tom was the one who handled the finances. He paid the bills, managed the investments, and kept track of all the passwords and paperwork. Sarah trusted him completely. It was their system, and it worked. But then, the unthinkable happened. Tom passed away suddenly from a heart attack, and in an instant, Sarah's world was shattered. The grief was a physical weight, a fog that settled over everything, making even the simplest tasks, like getting out of bed, feel monumental. Suddenly, Sarah was facing not just the profound loss of her partner, but a mountain of financial decisions she felt completely unprepared to make. The mail started piling up, letters from the bank, insurance companies, pension administrators, all filled with jargon and deadlines that felt like a foreign language. Every envelope was a fresh reminder that Tom was gone, a new wave of panic washing over her. She would sit at the kitchen table, papers spread out before her, and just weep. The numbers blurred, the words made no sense, and the sheer volume of it all was paralyzing. Her mind, consumed by grief, simply couldn't process it. This is what we mean by cognitive and emotional stress. When your heart is breaking, your brain's ability to handle complex information is compromised. That part of you that makes rational, long-term decisions goes offline, replaced by a primal need to just survive the next hour, the next day. For Sarah, every phone call felt like an attack, every decision a potential landmine. She was in a state of pure emotional overload, and it was in this deeply vulnerable state that she became a target, even if the person on the other end of the line didn't have malicious intent. She just wanted the pressure to stop. It's a situation that is all too common. The stress of bereavement, of a difficult diagnosis, of a divorce, it creates a perfect storm. Your emotional defenses are down, your cognitive functioning is impaired, and your desire for a simple, easy solution is at an all-time high. You just want someone to make it all go away. This is the moment when a friendly voice on the phone offering to help can seem like a lifeline. But as Sarah would soon discover, not every lifeline is designed to pull you to safety. Some are designed to pull you under. One afternoon, the phone rang. It was a man from a financial advisory firm. He was smooth, his voice calm and reassuring. He said he had heard about Tom's passing and wanted to offer his condolences and his services. He spoke of simplifying her finances, of taking the burden off her shoulders. To the overwhelmed and grieving Sarah, these words were like a balm to her soul. He didn't use complicated terms. He used words like comfort, security, and peace of mind. He made it all sound so easy, a clear path through the dense fog of her sorrow and confusion. He told her about a special investment product, one he said was perfect for someone in her situation. He called it a guaranteed high-return annuity. He promised it would provide her with a steady income for the rest of her life, far more than her current savings account. He painted a picture of a future where she wouldn't have to worry about money, where Tom's legacy would be secure and growing. He glossed over the details, the fees, the lock-in periods, dismissing them as just standard paperwork. He focused on the emotional sell, on her need for safety in a world that suddenly felt so unsafe. Sarah, desperate for relief, agreed to everything. She didn't read the fine print. How could she? The words were just a meaningless jumble. She didn't ask about the commission he was making or compare the product with others on the market. She just wanted the relentless pressure to end. She transferred a significant portion of the life insurance payout, the money Tom had left to protect her, into this new product. In that moment, it felt like a weight had been lifted. She had trusted an expert, and she believed she had made the right choice. The relief was immediate, but it was also temporary. This is the critical danger point for anyone experiencing intense emotional stress. The appeal of an unsuitable product is not in its financial merit, but in its promise of emotional relief. Scammers and unscrupulous salespeople are masters at identifying this need. They don't sell products. They sell solutions to pain. They know that when you're drowning in grief or anxiety, you're not looking for the best interest rate. You're looking for a raft. And they are more than happy to sell you one, without mentioning the holes in the bottom or the exorbitant price you'll pay for it later. The reality of Sarah's decision didn't set in for several months. It all started with a letter from her bank about a low balance. Confused, she called the helpful advisor, but this time his tone was different, less patient, more businesslike. He explained that the guaranteed income wouldn't start for another year, a detail buried deep in the contract she had signed. Then came the truth about the fees. The initial setup fee, the annual management charges, they were astronomically high, eating away at her principal investment far faster than she could have ever imagined. The money she thought was safe was, in fact, shrinking. She tried to pull her money out, to undo the mistake, only to be hit with another devastating blow, massive early withdrawal penalties. The contract she had signed in her fog of grief had her locked in for 10 years. To access her own money, she would have to forfeit nearly a third of it. The peace of mind she had been sold was a cage. The financial security Tom had worked his whole life to provide for her was now trapped, dwindling in an account controlled by fees she hadn't understood and penalties she hadn't known existed. The grief was still there, but now it was compounded by a new, sickening feeling of regret and fear. Sarah's story is honestly a heartbreaking illustration of how emotional vulnerability can directly translate into financial disaster. It wasn't that she was unintelligent or careless, it was that she was human. She was a person in pain, and her pain was exploited. The stress of her loss made her unable to perform the due diligence that, in normal circumstances, she might have. She fell for a story, a promise of relief, and the consequences were long-lasting, affecting her quality of life and her sense of security for years to come. This is not an isolated incident. It happens every single day to people in the throes of life's most difficult moments. The solution begins with awareness, both for ourselves and for the institutions we deal with. We must recognize that during times of high stress, we need to pause. It's okay to say, I can't make this decision right now. It's wise to bring in a trusted friend, a family member, or a truly independent, fee-only financial advisor to be a second set of eyes. And for financial institutions, there is a profound responsibility to identify vulnerable customers and provide safeguards, not exploit their situation. We really must build a system where a cry for help is met with genuine support, not a predatory sales pitch. Meet Arthur, 78, a master carpenter, proud, independent, sharp. His world was built on wood grain and handshakes, not glowing screens. But as everything moved online, banking, bills, even the best deals, Arthur was left behind. This is digital exclusion, not just missing out on gadgets, but being locked out of the modern economy. For Arthur, it's a tech tax, paying more simply because he can't navigate the digital world. Let's break down the real cost of this digital divide for someone like Arthur. Take his energy bill. For 15 years, he's been with the same company. They know him and he knows them. But what he doesn't know is that as a loyal customer on a standard variable tariff, he's paying one of the highest rates on the market. The best prices, the fixed-rate deals that could save him 30% or more, are almost exclusively offered to new customers who sign up online. To access them, he would need to navigate a comparison website, upload a recent bill, and fill out a series of complex online forms. Then there's his insurance. Every year, his renewal notice for his car and home insurance arrives in the mail. And every year, the premium has gone up. The insurance industry often relies on customer inertia, automatically renewing policies at a higher price. The only way to combat this is to actively shop around for new quotes each year, a process that has overwhelmingly moved online. Without the ability to use comparison sites, Arthur is a captive customer. He's forced to accept the higher renewal price because the alternative, spending hours on the phone trying to get quotes from individual companies, is simply too daunting and time-consuming. The problem extends beyond just bills and insurance. Think about banking. With his local branch gone, Arthur's access to his own money became more difficult. Simple tasks like depositing a check or asking a question required a bus trip to the next town. Meanwhile, online-only banks were offering higher interest rates on savings and no-fee checking accounts, benefits he couldn't access. He was missing out on the opportunity for his modest savings to grow, all because he wasn't part of the digital banking ecosystem. The convenience and savings that technology offers the masses became a wall that excluded him. Over the course of a year, this tech tax adds up to a significant sum. A few £100 on energy, another £100 on insurance, lost interest on savings. It can easily total £1,000 or more. For a pensioner on a fixed income like Arthur, that's not a small amount of money. It's the difference between a comfortable retirement and a stressful one. It's the money for a grandchild's birthday present, a necessary home repair, or simply the peace of mind of having a little extra cushion. Digital exclusion isn't an inconvenience. It's a direct and substantial financial drain. Bridging the digital divide starts with empathy and support. It's not just about learning new skills, but about families, communities, and companies working together. Sitting down with an older relative, offering patient help, and ensuring offline options matter. For Arthur, it was his granddaughter's patience that made the difference, saving money, but more importantly, helping him feel seen and included. True progress means no one is left behind. We all like to think we can spot a wolf in sheep's clothing. But what if the wolf smiles, offers you tea, and listens to your worries? Financial exploitation often arrives with a friendly face and comforting words. Margaret, a proud widow, lived alone, struggling with bills and loneliness. A charming contractor offered her help, friendship, and a solution. She didn't see the fine print, only kindness. That's the friendly face of deception. Margaret felt relief as the roofers began work. But soon, confusing letters from a finance company arrived, demanding payments she could never afford. The contractor vanished, leaving her with a shoddy roof and crushing debt. Her home, once a sanctuary, became collateral in a cruel scheme. These predatory loans prey on the vulnerable, turning trust into a weapon. For Margaret, the true cost was her peace of mind and sense of safety. The financial fallout was immediate and devastating. Margaret skipped meals, kept the heat off, and watched her world shrink to fear and deprivation. Her health declined, and shame kept her silent, just as predators hope. The equity she built was stolen, her family's future threatened, but the shame is never the victim's. We must protect each other, because safeguarding the vulnerable is everyone's responsibility. We've all had those moments, haven't we? 1 minute, life feels secure, bills paid, plans made, everything steady. Then, suddenly the rug is pulled out from under you. A phone call, an email, a meeting, your world shifts. The ground you thought was solid now shakes. This isn't just about money, it's about losing stability, identity, and peace of mind. Sarah's story reminds us, resilience is about how we face the storm, not just what we've saved. When you're in survival mode, your world shrinks. Long-term goals fade away. All that matters is getting through today, keeping the lights on, putting food on the table. Credit cards, once ignored, start to look like lifelines. But each swipe brings relief and a hidden cost, high interest, growing debt. For many like Sarah, it's a cycle that's hard to escape. The very tool that helps you survive can end up pulling you under. Your credit score feels personal, like your name. It's a badge of honor when high, but a scar when low. It represents reliability and trustworthiness. A good score unlocks financial opportunities, but debt can turn it into a source of anxiety. Every late payment is a blow. It's a scar on your financial soul. Rebuilding takes patience and discipline. There's a conversation we don't have often enough: the deep connection between mental health and financial well-being. When you're struggling inside, even simple tasks like opening bills or getting out of bed can feel impossible. It's not about being irresponsible. It's about carrying an invisible weight. For many, the barrier isn't money or knowledge, but the energy to face it all. This silent struggle is more common than we think. When you're overwhelmed, avoidance can feel like a necessary coping mechanism. It's a way to protect yourself from the anxiety and stress that comes with facing a difficult situation. By not opening the mail, by not answering the phone when an unknown number calls, you create a temporary bubble of peace. In that moment, the problem doesn't exist. You can breathe for a second, but we all know, deep down, that this peace is an illusion. The problems don't go away just because we ignore them. In fact, they do the opposite. They grow, they fester, they compound. This is the dangerous spiral of avoidance. A missed bill doesn't just disappear. It accrues a late fee. That late fee is a penalty, a tax on your struggle. Then comes the interest charge on the overdue balance. A second notice arrives, this time with more urgent language. The phone calls start, first as gentle reminders, then becoming more persistent, more demanding. Each step in this escalation adds another layer of stress, another reason to continue avoiding the problem. The hole gets deeper, the anxiety gets stronger, and the path back to solid ground gets harder and harder to find. It's a self-perpetuating cycle fueled by fear and overwhelm. This was Mark's reality. The small pile of mail on his counter grew into a mountain. The initial feeling of dread morphed into full-blown panic. He started screening his calls, his heart pounding every time the phone rang. He knew he was making things worse, but the thought of confronting the mess he had created was too much to bear. What started as a few missed payments on his utilities and credit card had now snowballed. His electricity was threatened with disconnection. His credit card company was calling daily. The situation had spiraled far beyond his control. The shame was immense. He felt like a failure, unable to manage the basic responsibilities of adult life. He couldn't bring himself to tell his family or friends what was happening. He was trapped in a prison of his own making, a prison built by depression and cemented by avoidance. This is the tragic outcome when mental health challenges go unaddressed. They can create a financial crisis where one didn't exist before, turning a manageable situation into a catastrophic one. The penalties and worsening financial problems are not the cause of the issue. They are the symptoms of a deeper, more painful struggle. Breaking the cycle of avoidance and shame takes courage, the courage to be vulnerable, to say, "I need help." Reaching out isn't defeat, it's strength. It's the moment you stop fighting alone. Letting someone in can turn darkness into hope. Support, whether from friends, family, or professionals, transforms crisis into a challenge you don't face alone. Asking for help is a brave act of self-love. Financial vulnerability can touch any of us, at any time, but you are not powerless. Seek support. Talk to a friend, family member, or advisor. Simplify your finances and use the resources available to you. By taking small steps and showing compassion, we can build a more supportive financial system for everyone. Every step forward is a victory. Thank you for spending this time with me.